When one of Wall Street's most recognizable voices admits he's confused, the entire investment community stops and listens, and that's exactly what happened when Jim Cramer publicly acknowledged his bewilderment over NVIDIA's share behavior. Jim Cramer, the host of CNBC's Mad Money and a man who has spent decades dissecting market movements with the confidence of someone who has seen virtually everything Wall Street can throw at an investor, found himself in unfamiliar territory. NVIDIA Corporation, trading under the ticker symbol NVIDIA, left him genuinely perplexed, and that admission alone speaks volumes about just how unusual and complex this particular situation has become. Now, to understand why this matters, you have to appreciate who Jim Cramer is in the context of financial media. He's not someone who typically hedges with uncertainty. He's opinionated, he's loud, and he's decisive. So when a stock is prominent and as widely followed as NVIDIA manages to leave him scratching his head, it signals something deeper is happening beneath the surface of this company's share price movements. NVIDIA has been, without question, one of the most extraordinary growth stories in modern market history. The company's pivot from being primarily a gaming graphics card manufacturer into becoming the absolute backbone of artificial intelligence infrastructure has been nothing short of remarkable. Their H100 chips, and now the Blackwell architecture series, have become the gold standard for companies racing to build out AI computing capacity. Microsoft, Google, Amazon, Meta, essentially every major technology giant has been throwing billions of dollars at NVIDIA's products. Revenue figures have been staggering, earnings have consistently demolished analyst expectations, and yet the stock's behavior has at times defied what traditional fundamental analysis would suggest should happen. And therein lies the puzzle that seems to have caught Cramer off guard. When a company reports what appears to be exceptional financial results, conventional wisdom dictates the share price should respond positively and decisively. But NVIDIA has repeatedly demonstrated a tendency to move in ways that defy that straightforward logic. Sometimes after blockbuster earnings reports, the stock has sold off. Other times, despite broader market turbulence, it has surged without an obvious immediate catalyst. The gap between fundamental performance and price action has created a kind of analytical fog that even seasoned veterans struggle to navigate. Part of this complexity comes from NVIDIA's unique position at the intersection of multiple competing forces. On one hand, you have extraordinary institutional demand and genuine earnings power. On the other hand, you have a valuation that at certain price points stretches even the most optimistic growth projections. Then layer on top of that the macroeconomic environment, fluctuating interest rate expectations, geopolitical concerns around chip exports to China, and the ever-present question of whether AI capital expenditure by big tech companies will eventually plateau or slow. Each of these variables introduces noise that can overwhelm even the clearest fundamental signal. There's also the matter of options market dynamics and the sheer concentration of hedge fund activity around NVIDIA. The stock has become such a focal point for derivatives trading that the tail can often wag the dog, meaning options positioning can drive underlying share price movements in ways that have nothing to do with the company's actual business performance. This creates feedback loops that are genuinely difficult to unravel. What Cramer's public confusion ultimately reveals is something that every serious investor should absorb carefully, that even the most sophisticated market participants, armed with decades of experience and a platform reaching millions of viewers, can find themselves humbled by a single stock's behavior in an extraordinary moment of technological transformation. Perhaps the most honest thing any analyst can say right now about NVIDIA is this: the old rules may simply no longer apply, and the market itself is still trying to write the new ones.